Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. As I have repeatedly stated at the start of this commentary these many weeks, many months now, there are many things imperfect with this daily chart. However, I will strive on regardless. Firstly, I use continuation charts as they are the best for seeing what is going on here. Unfortunately, this sometimes leads to changeover gaps as we saw in March. Yet this market, and Paris contracts generally, as those who follow my Paris rapeseed commentary will testify, have a remarkable propensity to fill the gaps, even changeover gaps. So since the big changeover gap in March, we've had well, it depends how you count it, but we've had a double bottom that has seen the market gap higher twice since. The last gap was a small one between 359 and a quarter and 359 and three quarters and has been filled. Okay, so all that being said, the drawing of the March-based bullish Andrews picture has been remarkable in showing the bullish angle of attack between the middle time above, currently at 402.5, and the lower time below, currently 377.5. Now, the lower time was breached last week, but it was an inverted hammer pattern that day, a pattern that is usually seen as bullish. And the very next session, that was last Friday, the market sealed the wound with an immediate countering combined daily key reversal up and bullish engulfing pattern, putting prices back well within the bullish Andrews pitchfork. This did not fully help a move higher, as the indecisive spinning top this past Monday showed. But by Tuesday, prices were back up and over the March-based 50% Fibonacci line at 367 and three quarters. Since then, prices have moved higher, tracking on top along the lower time. However, today it seems the actions seen elsewhere have influenced this market as well, and we've seen what looks right now like a combined bearish engulfing pattern and bearish opening black Mariposa for today. I said last week that I am not that confident about this pitchfork, as if this market really meant to push higher, well, then we should have seen the market punch up through the very recent 50% Fibonacci line at 367 and three quarters last Friday, but it didn't. So I'm still left, despite the moves higher this week, somewhat questioning the pitchfork's bullish strength. I'll be very interested to see what happens on Monday. Can the market maintain these levels, or will prices revisit the 50% Fibonacci line below the lower time? Hence, caution. London UK feed wheat. A lot less to go on here compared to some other markets, but we can still see some interesting things, and one seemingly key pattern. The peak in late March was violently countered over the last few days of March with two patterns, a very large and a very small consecutive hammer patterns. This led to a sideways action as the market tried to make sense of these big moves up and down, culminating in a key reversal up and bullish engulfing pattern in mid-April. This led to two gapping higher moves, one of which is still open. The resultant move up was limited, only moving up to the £325 area before a combined key reversal down and bearish engulfing pattern set the market back again, leading for some 5 sessions where the action was in effect an island top. This situation has since been rectified, but it also gave an unusual situation last Friday and again this past Tuesday. Last Friday we had a combined daily key reversal up, bullish engulfing pattern and bullish closing long white Mariposa. Whilst this past Tuesday we had a combined key reversal up, bullish engulfing pattern and bullish open and close long white Mariposa. What was unusual about both of these was how they were formed on the back of two prior sessions, in each case themselves being bullish sessions. This is very unusual. Anyway, as I said last week, this has left us with a late March, late April ascending wedge pattern, currently 313.30 to 329.10. This pattern is not the best ascending wedge pattern I have ever seen. It does look a little scrappy, but it's still there. And since Tuesday, prices have closed for 3 consecutive sessions over the upper trend line. Hence, it is time for me to place the possible primary and secondary targets on the upside. Thus, the primary target X is in the 344 area, whilst the harder secondary target X1 is in the 353.60 area. Now, caveats. Now you say there's caveats? Well, there is one. Well, more than one actually. Okay, so ascending wedge patterns perform poorly. And in the case that they do work, they should usually need to achieve their targets within 10 sessions or so, as by then their bullish power, in this case, is eroded. Additionally, this break higher with its real lack of higher movement could very well be a false break higher. So watch out for that, as any subsequent move down will likely have a far stronger force than this attempt higher. So overall, watch out. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.